Hey guys, how's it going? It's Lee here. Now, in today's video, due to popular demand, all over my comment section, we are going over Openpay, one of the other buy now, pay later companies that has done quite well in the past couple of weeks. It's interesting though that I've done so many of these buy now, pay later companies, and this is probably one of the last, if not the last one, I probably have got to touch on. So let's dive straight into it. So Openpay was founded in 2013 and entered into the ASX on December 2019. So they're rather new to the market, and I mean, it's easy money for the buy now, pay later companies at the moment. Realistically though, there wouldn't be such demand for the video. I wouldn't be having this conversation with you. This video wouldn't have been made in the first place had it not been for the the crazy rise in the buy now, pay later space. And having looked at some of the videos that they've done and also delving into the more recent reports, because remember they're new to the market, some of their recent reports into the market, I thought I'd lay it all out for you here. And spoiler, I mean, it's nothing really different. I mean, there's a bit of difference between this one and some of the other ones, but you'll see along the way. So who and what is Openpay? So unlike Afterpay and the other buy now, pay later companies, Openpay is actually quite particular about the markets they go into. So for them, they go into the home improvement market. Think like Bunnings, who they've partnered with. They've also partnered with automotive businesses. So now just think about the payment option being available to anybody who needs to service their car, who might need to finance a part of it and to buy, I don't know, like a cheaper car, because you can go up to $20,000 as the limit. And having looked on their site, they have about 1,194 merchants in Australia just in the automotive space alone. Another area they really focus on outside of retail is dental services, with 817 partnerships in Australia. Now, in their recent quarterly reports, they've outlined cleared growth areas in which they're accelerating within. And these fields are, like we mentioned before, the automotive and the healthcare sectors, which has grown 65 and 42% respectively in comparison to the prior comparable period. So it seems like what Openpay is trying to do is to carve out its own pathway by being one of the only providers in certain areas of the Australian market. So for those of you guys who have asked for Openpay in the comment section, I'm sure that you guys are aware of the fact that they've recently had a partnership with Health First. Now, to be honest with you guys, I didn't know what the heck a Health First or First Health or whatever it is was in the first place, so I did a bit of Googling. And within my Googling, I found out that they are listed on the ASX, and it seems like it's a penny stock at around 4 cents per share. But basically what they do is they are an online appointment service for health professional services and are based in Surry Hills in New South Wales. It seems like they also cover a broad range of health services that you can book on their app or platform. Now, one of the positives that I drew from this is that their network is quite big, or seems it anyway, because they have about 250 appointments each month and around 11,000 sites on their platform around Australia and New Zealand. So it seems like they have a solid platform, but what does this partnership actually mean for both parties? So basically, for this to be a win-win scenario, both parties have to win from this, right? And what both parties provide to each other is essentially leads. For Openpay, they are looking to tap into the merchant or the partners that My Health First has. And for My Health First, they want to potentially be the booking service for a lot of the health providers that Openpay already has on their system. So for this to be a win-win scenario, basically Openpay wants to be able to provide its services to a lot of the merchants in Health First. And Health First essentially wants some more merchants from Openpay to be able to be the only booking service for that health provider. But in this partnership, what they've outlined is that it's not going to be just an immediate rollout. Look, Openpay, you get to go and tap on the doors of all of our merchants and say, hey, we've partnered up with My Health First, and give us some of your business. That's not how it's going to work. So the plan is to have an initial 3-year term, which will involve Openpay's implementation across 60 sites, and Openpay will market the booking service of First Health to its existing merchant network of health practices to provide them with some more practices that might want to outsource their bookings to them. Like I mentioned before, essentially this is just a exchange of leads, right? So one party wants merchants, the other party also wants merchants on their side, cross-marketing, and bada bing, bada boom, you've got yourself a sweet deal. And also remember, both of these platforms already have clients, customers that are on them. So it's not just the merchants on each side, but it's also the clientele and the customers that each platform has as well. And if they can market themselves on each other's platforms, well, then they're getting in front of more eyeballs to hopefully convert them into some sweet, sweet dollars. Now, with the health sector being one of their verticals, and also another one being automotive and a few other things there, and home improvement. I don't know, I'm kind of split on my regards to Openpay. Almost said split it. So I'm kind of torn, right? Because yes, you do get repeat customers. Yes, it is a necessity. Yes, they are older customers and they are safer because they should have been further in their career. They should have a bit more money. But if you look at some of the other if you look at all of the other buy now, pay later companies, the demographics are always a younger audience because people who are older generally just already use credit cards, and it's not that different that they would need to change from credit cards over to a buy now, pay later service, because then that causes them friction to actually transact. And another thing to notice also is that there is nothing stopping a company like Afterpay, like Zip, which, by the way, Afterpay already has partnered up with like a few dental practices, so yeah, they're already in the mix. And so there's really nothing stopping one of those guys from coming in with a bigger customer base, with a bigger active customer base that is currently using their services, to come to these dental practices and pitch to them and say, look, we can provide way more customers than what you're getting with these guys over here with Openpay, what you're getting over here with My First Health or anything like that. And so the value starts to change. Yes, maybe Openpay is a little bit cheaper or any other service is cheaper, but when you are getting a mass volume of customers coming through, it really doesn't matter, because losing 2 to 3 to 4% as opposed to gaining, hundreds of more customers if you had just switched the platforms, it's huge. It's huge. And especially if your customers are coming in and saying, look, do you guys offer Afterpay? Do you guys offer Zip? And if they don't ask for Openpay, then kind of useless, right? But you know what, with all that pessimism aside, I do see that they will continue to grow. Again, it is a smaller company, so there is massive room for growth. But speaking of growth, one of their bigger growth engines, bigger than any of the stuff that's happening in Australia, is actually over in the UK, where they're getting the biggest portion of their growth. That's a lot of times I've said big, but just think about it. Trying to introduce another buy now, pay later company into Australia, converting users that are currently using another system over to you, like, you'd have to have a pretty convincing reason to do that. And the market's just so saturated that you do need to go into other niche markets, and it has to be international. It can't be in Australia anymore. It's just, there's like 6 of them. So the growth has been in the UK, which has been led by more market awareness and the launch of JD Sports Online. Now, just for reference, if you don't know what JD Sports is, they basically sell shoes and sporting apparel. And Openpay was one of the payment options when they launched their online e-commerce platform over in the UK. Which should be no surprise if people want to take up payment options, because the main demographic for JD Sports would be a younger demographic who wants some fresh new kicks and maybe can't pay for it now, but will pay for it later. In saying that though, their growth has come at a cost. They have pumped a lot of money into the UK market to make this all happen, of course, and I would be worried about the continued growth, because the growth looks good based on one big boost of traffic source leveraging off the brand of JD Sports and the hype behind it. In saying that though, good on them for getting that partnership going and now having like 109,000 customers in the books just in the UK alone. Now, it has made some marketing campaigns to reach 5 million Australians, but I don't think it's been that successful. Otherwise, on this report, there would be a stat on the conversion of the actual customers that they've reached out to. Also, if you look at their ads, I personally wouldn't use any of these, and especially in a pandemic, but hey, there's a market out there for everything, and maybe you might want a koala mattress. Now, in terms of shares, it's been doing really well in the market and has had a surge in line of all the buy now, pay later companies also. And just to quickly touch on its financials, I mean, nothing here really kind of surprises me. It's in line with any other growth company that's starting small. They're just gonna be at a loss for a while, especially a buy now, pay later company. They pay the merchants first and then they receive the receivables a bit later. So they are going to be at a deficit, and also throwing a lot of money into marketing, awareness, all these campaigns and all this type of stuff. So if we have a look at their cash flow, it's essentially they're negative at about $58 million Aussie, with costs in, like I mentioned before, marketing and funding their expansion in the UK. So overall, my thoughts are, number one, demographics are quite limiting if they're going for the ages of 30 and over, which they've mentioned before. Number two, verticals already have buy now, pay later competition within it. So I'm kind of whatever within that regards. And number three, growth is in the UK as opposed to the US or in Australia. Well, it won't be happening in Australia, but yes, so in the UK. So whether they can leverage that and make that bigger than what it is, I don't really know. But I will personally not be looking into it. I won't be buying any shares into Openpay. yeah, I just don't see it popping off. But yep, that's essentially my thoughts, guys. I hope you guys enjoyed the video. If you haven't already, leave a like and subscribe, of course. I can't believe I left this towards the end of the video, but make sure you do that for me. Later in this week, there will be a video on the most bought stocks in July, and that should wrap up the end of the month. Apart from that, guys, have a great rest of the week. I'll catch you guys later. Cheers.